Hello and welcome to Property Mastermind Podcast, episode 256. Today, insurance, risks, and when bad things go good. We're going to unpack that and you are going to be excited and mildly surprised, I would say. Let's jump on in, episode 256. Hello and welcome to episode 256. I'm Hilary Saxton and this is Bob Anderson. Good morning, Bob Anderson.
Good morning, Hilary Saxton.
Hey, what's your tip for the day?
Oh, I thought it's a dumb one. I thought of it before. I just saw you eating an apple. And I thought, my mum used to say, it's probably been around for 1,000 years, an apple a day keeps the doctor away. Some of these funny old sayings, hey, I don't know if that one's still around. Does an apple a day really keep the doctor away? Is that why you eat apples?
No, I eat apples because I really like apples.
Oh, okay.
Yeah, that's the only reason.
But you never go to the doctor much.
No.
So there you go, it works.
Yeah, I'm a bit of an apple
Eat
muncher.
more apples.
Maybe. I think a lot of those wives' tales, old wives' tales, which I'd call them, are based on something. So maybe it's something to do with an amount of vitamin A or the time of year that... I do believe that the time of the year fruit or vegetables come out are the time of year that our body needs them the most. I had a very good friend who was a doctor who used to tell me that, and she would always say, eat what's in season. It's when you're supposed to eat it. Anyway.
If they're old wives' tales, are there any old husbands' tales?
Doubt it. They never thought that deep. Oh, she went deep there, didn't she?
Ooh, okay.
Hey, Bob, thanks for your tip. Thanks for joining me this morning as usual. And as per our chat this morning when we were having our coffee out on the balcony, talking about what the podcast might be about today, it was around something that's happening with us right now, and it got us thinking about other things. And then I said that would be a really interesting podcast topic because I know people like general interest and they like stories that are real, and that's pretty much, and you also like to learn about property development, and this covers all of those. So we're going to unpack first of all insurance and how insurance works with property development, because it's a little bit different and there's different types and different reasons and who does what when and where. We're going to talk about how we recently got sort of bit on the bum, I might say, with insurance, and how that potential negative thing became a good thing, and how often that happens in property development, and how somebody didn't also go by their word, what they said they were going to do. They didn't do what they said they were going to do, which, is a little bit disappointing. Anyways, let's begin with property development. Let's begin with insurance, and let's unpack, I suppose, when you first get insurance, you've either bought a site with a vacant land, we'll start there, and then we'll do a site with a house, and I think we'll just unpack that, unless there's anything else we should start with, Bob.
That's a good place to start.
Yeah, go.
Okay, so let's think about us buying a site. Now, more often than not, what we buy, because most of us are doing infill developments, not right on the outskirts of the suburbs, we're doing infill, it's usually an older house. And we're either going to knock it down and build something new, or perhaps we'll leave it on site, maybe a bit of a quick reno, and build something else on site. Could be a house in the backyard, duplex in the backyard, whatever it is. So what we've got to be a bit careful of, obviously from the time we settle, it's our responsibility in terms of insurance. The issue can arise, well, first of all, it could be a vacant lot, and it's hard to insure a vacant lot. What are you insuring against? Well, particularly public liability, because somebody could go onto our vacant lot and do themselves an injury and then try and sue us.
Even if they're not supposed to be on there?
Even if they're not supposed to be on there. There's case law around that, of people even breaking into houses and cutting themselves and suing. So vacant land insurance does exist, but you've got to have a bit of a shop around. Let me say this, just as we advocate people having good commercial finance brokers to help with their finance, a good insurance broker is really important as well, because they'll find the type of insurance that you can cover, public liability insurance on vacant land. And so that's one thing. But what if it's the old house? Well, it could be that there's a tenant in there. You might leave a tenant in a house for a period of time while you get your approvals. That's okay. That'll be more like landlord insurance plus the normal fire insurance as well. But often it's vacant. And so what if the house is vacant? What a lot of people don't realise is insurance companies, some do not insure vacant houses at all.
What's the reason for that, Bob?
Well, they just say it's not being looked after there's nobody there. Vagrants could move in and decide to start a campfire. Like, who knows?
Like we know, which we'll unpack shortly.
Yeah. So there's some that won't insure at all. There's some that will insure a house vacant up to 30 days and not beyond that point.
What's the reason for that, Bob?
Oh, just different rules. Horses for courses. And so it's important to get the right sort of insurance. So once again, good insurance broker is important, but you want to have that place covered. But you could start off with a house and turn it into a vacant lot. Quick story. You might remember this one. It was a four-townhouse project I did with my son Luke. It's quite a while ago now. I reckon it was about 2014. We were in a hurry to get started. So rather than get the builder to demolish the house, we were still sorting out the builder. We demolished the house ourselves. It was a pretty crappy old house. Wasn't much to it. And so we demolished it. And it was about 4 or 5 weeks before the builder started. So once the builder starts, his insurance takes over. We insured it as a vacant block of land, but guess what? We didn't put a fence up. And some people who were obviously doing some earthworks or digging a basement or doing something in the vicinity came and dumped an awful lot of dirt on our block. So they dumped so much dirt on our block that it cost us, 12 years ago, $8,000 to remove the dirt. And so that's not an insurance thing so much, but here's a tip. If you've got a vacant block of land, not a bad idea to get some fencing around it. Temporary fencing. The builder will take over the temporary fencing when he moves on site. If we'd have had the fence up, we wouldn't have had all that stuff dumped on our site. Not insurance, but something to watch out for.
Yeah, that's crazy.
Yeah.
I was actually, when you say public liability insurance and we're talking about people breaking onto sites or hurting themselves, I think of that as stupidity insurance really, but it is really like, why, one, they shouldn't be there and then they hurt themselves and then they blame you. It's just stupid.
Yeah, it's crazy stuff. So good broker, get the right insurance. That's the initial insurance. Once a builder arrives, it's a bit different.
And Bob, what are we talking about cost-wise and variations in costs? Are there quite big variations, or is it reasonably standard? Let's say 800 metre lot.
Oh, vacant lot, yeah. I can't remember, but I haven't insured a vacant lot for quite a while, but I can remember it seemed pretty reasonable. It's not going to burn down. No, it's more the public liability thing,
The stupidity insurance.
Yeah, and how much do you put on it? 5, 10, 20 million? I think I went the whole hog, put the 20 million on. So just in case somebody, did a backflip on my block of land and became a tetraplegic or something, so I went for the 20 mil. But I remember it was quite reasonable. But there's only a couple of insurers in Australia that did it, and that's why a good broker is important.
So we're talking insurance. What other things do we need to cover when it comes to... So you've talked about having a house that's on there and insuring that, and then if it's empty, some people might insure that for the 30 days, and then we've got a vacant land. What other insurances do we need to think about before it becomes the builder's, so you as the developer, before it gets taken over as the builder's insurance? So do you set it for a certain amount of time and then you just call up the insurance company when you're done? How does that work?
Yeah, well, you can cancel insurance. It's just normal insurance. You can cancel your home insurance, your motor vehicle insurance when you sell it. So you're just paying for it, and then you get obviously some sort of refund. If you took a 12-month policy out and you only need it for 6 months, you cancel it in 6 months. There'll be a small admin fee and so forth, but you get a rebate. But they're the main types of insurance anyway that you need, up until the builder's there. So it's either going to be vacant, it's going to be a house, the house could be tenanted, the house could be vacant. And
builders are pretty good at managing their insurance always, or do you need to check with your builder and say, is the insurance in place?
They have to, because the thing is this: when the builder's coming on at the construction stage, right? So we would have acquired our site, got our approvals, and then the builder's coming on to construct. Well, part of that is he can't start work unless the plans are stamped approved by a certifier or a building surveyor. They won't stamp the plans approved until they see copies of the receipts where the builder has paid for the insurance and also paid for what they call the portable long service levy in each state. So those plans will not be stamped until they cite that. So the builder has to have paid it, shows the certifier the receipts, certifier stamps the plans, and the builder can't start without the plans being certified. So that's been around, I don't know, 25, 30 years. And they brought that in for that very reason, that some builders didn't really pay their insurance and went on and started building. And then that would have thrown the responsibility back to a fair extent on the landowner themselves.
And so we've got...
So that doesn't happen anymore.
Yeah. It's a nice clean process, and you, the developer, don't really have to worry about it. You've just got to make sure you've got your insurance up front.
That's normally part of your building contract price.
Yeah.
The builder will include the insurance in the price. That's pretty typical in a lump sum fixed price and time contract. It's built in there, and he'll pay the relevant insurances. There's a few different insurances they have to pay. Same thing, public liability. There's all risks insurance. You'll have to, if he's got employees, you'll have workers' compensation insurance. So they have to cover all their relevant insurances and produce receipts of it before they can even step on site and take control of the site.
So we've talked about the initial upfront insurance, and you said some insurers won't insure you. So have you ever, or is it reasonably common for people to think, oh no, I won't worry about it, it's only going to be a month or so?
Yeah, it's probably common.
Oh, really?
Yeah, either they don't think about it because they don't know, because no one's ever told them, or they think, oh, it's a vacant block of land, nothing's going to happen there. Or, it even might be a derelict house with nobody in it, and they just take the punt. Oh, well, I don't even care if a couple of vagrants move in, it doesn't really matter. I'm going to demolish it pretty shortly anyway, and, 4 to 6, 8, 10 weeks going to get demolished, who cares? Not a good attitude.
No. Okay, so we've established insurance up front. We've established the builder takes over. We get to the end of the project. Whose responsibility is it now before it goes back to the developer, obviously takes over? So how does that happen? What's the process?
So the date of practical completion, which is a legal term, when the builder's done everything they had to do under the terms of the contract, that's when the builder's finished. That's when his insurance finishes. He steps off site. He no longer has control of the site. From that day onwards, it's back to the owner of the land, the developer, to insure the finished product. So it could be 2 duplex units, could be some houses, could be some townhouse apartments, whatever it is. They have to be insured. I can't tell you the number of newbies or people like new to property development who don't even think of that, and they just don't even do anything. When a purchaser buys that property, then that purchaser will take out their own insurance. But between the builder leaving the site and the purchaser settling on that sale, and sometimes when they sign the contract, depending on the conditions of the contract, but there's a period of time where there's no insurance. If you have a look at the fine print in finance documents, it's always spelled out. The financier says that the owner has to insure the product after the builder's left, but it's on page 28 in 6-point print.
At the bottom. At the bottom.
So people miss it if they're not experienced. And there's been disaster stories out there, properties burning down, and then they're responsible. You can't sell a burned out building. You have to clean it up. Then you only got the land to sell, and that's not going to clear the debt because you've got the construction loan, the acquisition loan, all grouped into one loan. Not a good position. And then, of course, the financier can sue because you took away their security. So important to get that. Now, once again, they're unoccupied until someone takes over. So you have to once again get the right type of insurance on that sort of property that covers new properties, but not yet owned by the developer, but not yet owned by the new purchaser, not yet tenanted, or not either tenanted if it's an investor buying, or owner occupier if they're moving in. And so that once again you've got to get the right insurance, because not all insurers cover that sort of stuff. And because you might still be setting up an owner's corporation or a body corporate at that point in time as well. So it's a little bit complex, but the point is you don't have to be an expert. You simply have to go to a good broker and they'll get you the right sort of insurance. One hopes.
Mm-hmm. One does hope. So the insurance broker is quite an important person. Essentially, there are 4 different insurances. The first one is the owner of the property, and then the developer buys. So the developer buys, they take over that insurance, which could be any sort depending on whether the house is empty, whether it's land, whether there's somebody in the house. So that's dependent on that. Then the builder takes over. That's all accounted for and part of the contract. And when you get to practical completion, then the developer takes back over, remembering that it's a certain type of insurance because that property is likely going to be empty and on the market, likely. And then lastly, it gets sold, and then the purchaser has the new lot of insurance. So it's probably one of those things that we take for granted, but we probably didn't always know was going on. And I thought it's a really good time for us to talk about what happened to us recently, and this is what triggered this. And that's why the second half of this chat was about and how bad things turn good, how they can in property development, or how you think something may be a disaster and it's actually not. So we did buy a site and we got the insurance for it. Correct me if I get all of the details wrong, Bob, but we got it insured, and then the insurance agent, so we were going to renovate actually a childcare, and it's quite a substantial one, and it takes a little bit of time, and you've got to get a person in. There's a lot that goes in the back end of that, sort of maybe 3 months before construction started. And so we are getting all of that organised, and we had insurance, and the insurer knew that the building was going to be empty, so he did know that.
That's the broker.
Oh, sorry, the broker, yeah. So the broker knew that the building was going to be empty, and
that we were going to do a reno.
Yeah, and that we were doing a renovation, so that was in his brief, but he actually got the wrong insurance. So that, I suppose the wee lesson there could be, should we have read the fine print, even though he was told that, we didn't double check that he had that right insurance, but you would think that the broker would get the right insurance anyways. He didn't. We had, what happened next was those vagrants we talked about broke in and started living there, which is a little bit annoying. But then it turns out they were drug users and they were stealing from there, which is a little bit annoying, until they start getting in the ceiling and taking the copper pipes, and then it starts flooding, which is really annoying. Like, it's bigger than a little bit annoying, and it starts causing what they assume was going to be about $50,000 damage. And the broker at the time, he said, "Look, we won't worry about it. My personal indemnity will cover that, because it was my fault."
Professional indemnity.
Yeah, his professional indemnity would cover that. So, okay, all good. We didn't worry about it. Then construction goes to start, and just prior to that, we realise there is a lot more damage. We get the quote back, and it was way more than we thought it was going to be. And we're like, holy heck. Remember, we've got investors. I'm an investor. We've got investors in this, and we're like, goodness me, that is not what we thought. We go back to the broker, who then puts his hands in the air and says, no, I can't do that. I'm not going to cover that anymore, because it was way bigger than he thought. And remember, he belongs to a big company, and so for us to sue, which we thought we would have taken way too long in time. They would have dragged it out, so the investors would have not got the return that they signed up for, and it just would have made the whole thing, just prolonged the whole agony of the whole thing. And so we just had to move forward and look for other ways that we can recoup costs and work with the builder and blah blah blah. So quite devastating. But then there's a big but on the end of this one, because as the builder starts pulling the childcare apart, some walls and stuff have to come out because they've been damaged with water from the ceiling pipes being stolen, so the drug users could use the copper, bless them. We find that there's actually a little bit more mould in there that we didn't know about. And so that's turned out to be a wee blessing in disguise, because we know of cases within our own community. A wife of one of our mentoring students, the childcare she manages had mould, and they shut it down. So in hindsight, that terrible thing, and we're all rolling our eyes and looking at, oh no, that's quite a disaster, and a little bit frustrating for us, and a few lessons in that, which I would like you to unpack, Bob. But it turned out to be a good thing, which we've kind of started going, oh, okay, that was probably quite good. But can we backtrack, Bob? Is there anything I missed in that story that we need to point out?
Pretty much on. I guess now I feel stupid, because I've just said how important it is to have a broker, and now here we had a broker who got the wrong sort of insurance for us. He was told, in fact, he had even documents showing that it was going to be a renovation and that it wasn't being run as a child centre, it was vacant. However, he went and got the insurance with an insurer who doesn't cover vacant commercial. That's a commercial type of insurance. And so when we went to claim on it for the damage, that's when we found out that insurer doesn't claim either vacant properties or properties under renovation. And as you said, it ended up a lot more than what we thought it might cost, and he just backed out. And then what happens in those cases is the big insurance companies, I mean, this is a big insurance company, they just basically sideline the broker, and they just say, don't say anything, keep out of it. we'll handle it. And so the only little bit that we did get a lawyer who's an expert on insurance. That person used to be an in-house lawyer for one of the big insurance companies and then ended up going private. And that person sometimes represents insurance companies and sometimes represents normal people. That lawyer did say, after examining everything, that we probably would just spend an enormous lot of money, be dragged through the courts for years, as big insurers can afford to do, and it's just not worth it. So we basically had to walk away. What do you learn from that? I guess we have to take some blame because we didn't read every single word in the insurance document. I'm not sure that it said, I mean, it's not going to say it's not covered. There might be something in exclusions in there, I don't know, but you think the experts would get it right, and they didn't. So we won't be using that broker again.
No, he's lost a bit of work, and you said you'd used him for many, many years, didn't you?
Yeah. He's actually, we've got some current projects where we're using him, but it'll be the last one.
Yeah, oh well. But then on the flip side, it has turned good because we have found some extra mould. We've got photos back.
Better to find out now, hey?
Oh, yes, because they'll just shut them down in a childcare if there's mould. And then we'll be all finished. It'll be looking gorgeous and the children will be in there and then someone might pick it up and then it's a disaster.
Yeah. And we've worked out a couple of ways where we might be able to recoup a fair bit of that extra cost that was unaccounted for initially.
Okay, so Bob, should we talk a little bit more about that project and how it works?
Well, you can.
Yeah.
Fire away. So the interesting thing about us doing a renovation, which is just a one-off, and we were looking to build a childcare and just stacking those numbers up at the time wasn't working, and this sort of popped up and ran the numbers and found out that it worked. What's good about this one, Bob? Well, what's good about it, it was a form of childcare that has been operated as one for about a year. Prior to that, I think the owners were involved in a whole heap of things, end up going broke, and they just lost a number of businesses, including the childcare. So the building was there, but no childcare. And it was built in 1993, so it did need a good facelift. It needed to be brought up to current standards. And so it is a reno. We talk about doing a reno and flip. You've done, God knows, 20-something of those in your lifetime. You've bought an old house, done a reno, whether it's structural or cosmetic, and then flip it on. This is buying a former childcare, doing a complete reno and flipping it. But the key to it is that we had the tenant. We had the non-profit operator who was prepared to sign a 15 plus 15 lease. So basically, including the option, a 30-year lease. And they're a well-known not-for-profit. They've got another childcare not all that far away, and so a good operator. That's the key to making that one work. And so it's a reno and it's a flip, but tends to make more profit than your normal flipping a house.
And the bonus about it is once it's finished, and as any developer knows, I'm not going to say stress, but you've got to sell your product at the other end, and you always want it to sell fast because that's the money coming back in, and then you've got less holding costs. And of course, in your feasibility, you've allowed for a certain amount of time, we hope, to sell. So that's all accounted for. But when it comes to something like a childcare, these start making money immediately once they're leased, or we've got a structure of how we have moved forward with this. But if we hold it, there are no holding costs. We make money even by holding it. So the investors aren't at that waiting for the sale, which is, property development, but we can wait for the sale and still make money, which is...
it's a bit of a flip, isn't it? Because let's say we did a duplex, we finished building it, now it's on the market. So we're paying interest on that loan until we sell the duplex, and then we can get rid of the interest, get rid of the loan. In this one, yes, we have borrowed money from a bank to do it, and we do pay interest. But because of the income stream from the childcare, as opposed to like a vacant duplex unit, the income from the childcare is quite a lot greater than the interest we're paying on the loan. So this is a situation where the longer it takes us to sell it, the more money we make.
Yeah.
Which is the opposite of what would normally be the case.
Yeah.
So because that makes it a pretty attractive proposition to do. So hence that's why we're doing it.
And we've that's our little stumble that we've had, and
bit of a stumble.
Like all developments, there's just always a stumble. I think, but it's like any job, anything you do, you project manage something. There's always going to be little stumbles, but there are solutions. We had a solution anyway with the insurance. We did find a way that we can claw back well, shall we say how we envisage clawing that back, or?
Oh, I think, well, yeah, you can say it. We'll pull a fair bit back.
We'll pull it back because we won't go through a broker to sell it or an agent to sell it. We've probably got some connections that we can inquire to, which will pull back a substantial amount, well over in the hundreds, well over 100,000.
Yeah.
So
commission on 9.5 million sale is fairly substantial.
Yeah, there you go.
So that'll help a lot.
Yes.
To offset that. We in our feasibility, we've allowed for an agent to sell it, but we have enough connections, and they're in such strong demand. Fully refurbished childcare, 130 places, all top operator, 30-year lease with options. Yeah, I think You're
probably listening now thinking, I'll buy it. So if you've got to spend $9 million and you want to buy yourself childcare, reach out. Hilary at Property Mastermind. Yeah, let me know. But yeah, I'm not even joking. You never, honestly, the stranger things have happened. If you're thinking about buying a childcare, we've got one coming up soon.
Decent investment.
It's not bad. So, Bob, I think we've probably unpacked enough about this one today and talked a little bit about insurance, which may be a little bit of a surprise to some people about the different types of insurance, and maybe just a reminder to be aware of who's doing what for you, and that when you think you may have a level of trust, so how things can go wrong, which does happen. Yep.
Yeah. I'm sure a lot of people have their house insured, they have their car insured. Well, don't forget to insure this when you're doing a property development. Yeah.
All right. Well, we hope you take away something from that one. Realise not all bad things go bad. Sometimes bad things turn good. We found the extra mould. And if you're interested in mentoring with us or having a chat about how we have courses that might help you, feel free to reach out, admin@propertymastermind.com.au, or there's a link below to reach out to the team. And head on over to our website as well, propertymastermind.com.au. All right, bye for now.
Bye.